Okay, welcome back to Module 1, Part 2. Here we have a business plan for a new venture. Now, I'm going to read you a definition of a business plan. It's a written document that describes in detail how a new business is going to achieve its goals. A business plan will lay out a written plan in the form of a marketing, financial, operational, and management viewpoint. You need to realize that when you approach a bank, your business plan has to look professional and convince somebody who's going to invest money that it will work. So before you write the business plan, you need to ask yourself, what are my products? Where will I sell them? And how will I go about selling those products? All right, let's take a look at the elements of a business plan. Firstly, we've got the description of the business. That is, who are you? What are you going to be doing? I'm going to be selling hot dogs, or I might be in real estate. That's a description of what your business might be. Secondly, you're going to have to create a marketing plan. And a marketing plan tells us what has to be done to sell the products, to promote the products, to make the products available to all South Africans or to your segment of market. Finally, we've got the management or operational plan. What qualifies management to be able to run this business? How will a financial backer have confidence if he didn't know anything about the management or the operations of the business? And finally, you'd want to summarize your business plan. What is it in a nutshell? How much money do you need? And where are you going to be 2 to 3 years from now in your business plan? Lastly, you would look at providing supporting documentation, such as copies of leases, or if you've got a contract with the municipality or a contract with another supplier, you would want to include these as evidence that you know where you're going and what you're doing as a business. So the objective of a business plan really is to map out the goals of an organization and then to have your organization convince any possible backer that your idea is solid and will make money and that they will not lose money on your idea. Okay, let's go back to point number 1, a description of the business. What kind of business is it? Is it a private limited company? Is it a closed corporation? Or will you be trading as a sole trader? That's the kind of thing that you'd want to put in your business plan. Because a private limited company is something which is an entity on its own. It can sign contracts. A sole trader, on the other hand, might be a little bit at risk if something went wrong with the business and, say, for example, someone sued him. What qualifies the owners to be part of the business? Have you been in the hot dog business for the last 10 years? Or have you been in real estate for 5 years? Or does somebody else in the business have the experience that can prove that the business plan will work and can be managed properly? The other thing you need to look at is what products or services will you be selling? Don't forget, a product is something tangible. And on the other hand, a service is something you provide. It can't be touched and yet is just as equally as important as a product. In both cases, a product and service are something you can sell, something you can make money from, something your business needs to explain. What is the general market of the products and services? Are we marketing to all South Africans or just to people in Port Elizabeth or to those in Alexandria? Who are we talking to with our products and services? So a sector of the business might be called a segment, and that's fine too. Just dealing with one segment is fine and you can make money out of it through your business plan. Let's look at the second point, the marketing plan. How are you going to get your products from where they are to the customer? How are you going to promote your products? Will you have an advertising campaign? Will you give out flyers? Or will you just use word of mouth? What price will you sell your products at? It's quite important because too high a price would mean you wouldn't get a sale. Too low a price and people might think that your product is faulty or not of good order. Is the demand for your product going to be seasonal? Will you expect all your sales to happen between December and February? Or can you expect to have sales occurring right throughout the year? Because this could have a bearing on your financial plan and how you draw that up a bit later in the program. How will you advertise your product? You need to ask yourself. Advertising has many forms: television, radio, paper, newsprint. There's many ways which you can advertise your product and make it known to the public. And finally, what is different about your product that you have to offer that competitors aren't doing? And this is a really important point. It's all very well offering something or the same thing that everybody else is offering, but what's different about yours? Is your service different? Have you thought about how your product would be better for somebody else? Have you given that some thought? Is the color of your product different? Is the packaging different? The main thing to realize here is that you want to try to make your product and or service slightly different or different to your competitors. By knowing what's different about your product, you're able to focus on the advantages that your product can give to your customer. And in so doing, you can generally charge a higher price. Let's have a look at the operations or management plan. So operations is all about how you're going to run the business. Will you have a production plant or won't you? Will you have a production manager? Will you have premises? Will you work from home? There's nothing wrong with working from home. It reduces the costs. And when you look at your management plan, you've got to ask yourself, in my management plan, how do I prove that the people that are running the business are sound people, are going to make the right decisions to make profit for the business? Look at your organizational structure, for example. You could typically have, and we'll put one on the screen for you right now, a managing director at the top, human resources, you could have a financial administrator, you could have a marketing person, and salespeople underneath the marketing people. So your organizational structure needs to be indicated within your business plan. And that is how a financier or a financial backer would like to look at it, to see how the structure of your business will work. And then how will your products be bought and sold? Are you selling something over the internet? Is it something that will be delivered in person to somebody? You need to ask those questions, and those need to be outlined in your business plan. And finally, you may want to look at doing, in fact, it's quite important you do a SWOT analysis, which is the strengths, weaknesses, opportunities, and threats. Point number 4, the financial plan. And this is always the tricky part. So your financial plan has to have an income statement and expenses. You have to indicate exactly how you're going to bring money into the business and how you're going to spend that money. Spending money in things like telephone, rental, coffee, tea, salaries, all sorts of things like that, and those must be specified within your business plan so that a financial backer can see that your business plan and financial plan are reasonable. You want to be honest here, because don't forget, this plan is not just for financial backing, it's for you to live by as you go forward in your business idea. Have a look at startup costs, for example. Will you need machines? Do you need a fax machine? Do you need a machine to produce the goodies that you're making? These are kinds of things that you'd have startup costs for. Working capital also refers to loans that you might ask for. Maybe an overdraft just to carry you for the first 3 or 4 months. Bear in mind also that borrowing money normally requires collateral, but we'll discuss that in a later unit standard. Okay, so we've got the budgeted sales and budgeted expenses of what we predict is likely to happen. We might even have a budgeted balance sheet, which is normally your assets and liabilities. You'd want to show these inside the financial plan. You might even want to show how you've costed each of your products or services. You buy it for, say, 10 Rand, add on 30%, say 3 Rand, and you're selling it for 13 Rand. That would be how you would cost your product, and we can see that inside the financial statements and the financial budget. Also, you'd want to indicate what sort of volume of sales, because that indicates over months going by how many products you'll sell, which equals the total sales that you make. The total expenses equals gross profit, and gross profit is what the business is really all about. Lastly, you'd look at a cash flow analysis. Now, cash flow is something whereby we look at the money coming into our business and the money going out. Obviously, we'd like to have more coming in than going out. But when we first start a business, it's very possible that cash flow might be a little bit thin. In other words, more going out to set yourself up and less coming in by way of sales. We want to be honest and open about exactly what sort of cash flow requirements our business will need. Point number 6 was all about supporting information. And as I mentioned, you might provide copies of lease agreements or a contract with the municipality or with a supplier. CVs of management is also very important. Contracts and agreements that you've got into. So when you're referring to something that may have supporting documentation attached to it, you can supply that under this section called supporting documents. And it basically backs up your business plan. Don't forget also your organogram, which was your family tree of your business, MD at the top, HR on the left, etc., also falls under the supporting documents. And you might want to provide supporting documentation into research that you've conducted in the marketplace. Which customers would be buying your products? What are the competition doing? Things like that to support your arguments going through your business plan. Let's conclude then on producing a business plan. I'm going to read you these 3 main points. Your business plan must show the investor that you've researched your business fully. Let's say it again. You've fully researched your business. You've covered what products will be sold. You've covered what competition is likely to be out in the marketplace and what sort of pricing you'll sell your products for. Also, you'll want to prove to the business investor that your idea is achievable. No investor wants to put money into something that's going to fall flat on its back a couple of months from now. They want to make a return on their investment. Fair's fair. So, in a nutshell, your business plan must show that you can achieve what you say you can achieve. I look forward to seeing you on the next module.